Let's talk to Jeremy Stretch. He's the head of G10 FX from CIBC. A very good morning to you.
Good morning, Nick.
Let's talk about the dollar index. What is going on with the dollar? Onward and downward? Is this political? Is this economic?
Well, I think it's a little bit of both. I mean, clearly, we're waiting to see if we do get further clarification from Mr. Mnuchin about the comments that he's made thus far in Davos regarding the valuation of the dollar. I think we can safely say that when we had that dollar appreciation 12 months ago, when people were buying into the dollar reflation trade, I think that was always going to be inconsistent with making America great again, because of course, if you want to boost your trade position, you want to make your exports competitive, and that's consistent with a cheaper dollar. So I think the US are very happy that the dollar is on a depreciating trend. I guess the problem is that the US need to be careful what they wish for, because of course they could amplify that process if they start to back the negative scenario up with rhetoric. And of course, it isn't just a case of dealing with US and US monetary policy. It is, of course, the dollar is linked to a number of other currencies and a number of other jurisdictions, and that adds to the vulnerability of the whole process, particularly in terms of the context of the uptick that we're seeing in commodity prices as the dollar falls.
Well, I see that gold's at the highest since 2016, oil's at the highest since 2014. So is the biggest fear as an economist the inflation that this is going to cause?
Well, I don't think we're in a scenario where we think the inflation spike is going to be so substantial or so durable that it's going to cause central banks to react aggressively. But you have to be mindful of the fact that there is going to be an inflation influence coming in the course of the upcoming months because of this commodity price uptick, which, as I've mentioned, is partly a reflection of the demise of the US dollar. So it is going to cause some inflationary consequences, or have some inflationary consequences. I think the issue from a central bank perspective is what's happening on the wages side. So unless we start to see employment growth leading through to higher wages, then I think central banks can and will still be relatively cautious in reacting to the uptick in inflation, because I think core inflationary pressures outside of those sort of food and energy components will still remain relatively well contained. Now, that's not to say that we should be complacent, but I think relatively contained. So I think that should limit the immediate consequences of central banks rushing to tighten policy aggressively and starting to derail what is still a globally synchronized recovery.
So finally, on this subject, is the trend your friend? You see continued weakness in 2018 for the US dollar?
We would, and we have anticipated a cheaper dollar through the course of 2018. I think what we need to be careful of is almost the mirror image of what we saw in 2017, is the market's getting too carried away with a trend in the early part of the year. So I think I would be cautious in terms of anticipating the follow-through in this current early year demise of the US dollar. So I wouldn't be surprised if we do see a little bit of a correction. I think we're obviously with the ECB, that's a risk in terms of encouraging a little bit of a reversal there. And I think the Bank of Japan are also becoming a little nervous about the rate of appreciation in the yen. So I think it may be a case that we need to see a little bit of a correction first, but I think in the course of the calendar year 18, we will see a cheaper dollar across the year.
Understood, Jeremy. Thank you very much indeed.
Thanks very much.